The bank teller almost talked me out of $15,000. I was at my bank for 10 minutes. 10 minutes to open a second account, and in that time, a teller almost got me to sign up for something that, I actually did the math later, would have cost me around $15,000 over my life. Not a scam, not fraud. Something completely legal that banks do to basically everyone, and most people just say yes to it. I didn't. And the reason I didn't is kind of embarrassing, honestly, because it wasn't some genius money hack. It was one question. Stick around, because you've probably already said yes to this without realizing it. So here's the actual situation. Nothing dramatic. I just wanted to split my money. One account for bills, one for whatever's left over, so I'd stop accidentally spending rent money on takeout. Very responsible of me, I know. Teller's nice. She's typing, doing the normal account opening stuff, and then, without even really looking up, she goes, "While I have your account open, I noticed you don't have overdraft courtesy coverage enabled. Want me to turn that on for you? It's free to enroll." Free to enroll. I want you to sit with that phrase for a second, because it's doing a job. Nobody, ever, in the history of banking, has been charged money to sign up for something. That's not where they get you. It's what happens after you say yes that costs you. Let's break down what this coverage actually does, because the name makes it sound like the bank's doing you a favor. Kind of the opposite. Say your balance is $2. You're at the gas station. Grab a coffee, $4. Completely forget your base. The purchase goes through, and now you owe $35 for a $4 coffee. That's not a fee. That's a markup of like 800%. And it gets messier. Say you make 3 small purchases in one day, all before you don't. There's something called transaction reordering, where your biggest purchase of the day gets processed first on purpose, because it drains your balance faster and turns your 2 smaller purchases into 2 separate overdraft fees instead of one. I know that sounds like something I made up to sound dramatic for you to own it. Overdraft fees didn't used to be a real business model. Back in the day, banks mostly just declined transactions when you were out of money, same as a normal store would tell you your card got rejected. But somewhere around the early 2000s, a bunch of banks realized that covering the transaction and charging a fee for it was way more profitable than just saying no. So they started marketing it as a courtesy, a nice little perk they were doing for you, and rolled it out to millions of accounts by default. At its peak, overdraft fees alone were generating over $30 billion a year industry-wide. $30 billion. From $4 coffees and forgotten balances. That's not a side hustle for banks. That's a core business line. Let me give you a second example, because the first one's about me, and I want you to see how this plays out for someone else too. A friend of mine, I'll leave her out of it by name, but she gave me permission to share this, got hit with 4 overdraft fees in a single day. Single day. She'd gotten paid, thought the deposit cleared overnight like it usually does, and made a handful of small purchases the next morning before checking her balance. Deposit was still pending. 4 purchases, 4 separate $35 fees before 10 in the morning. That's $140 gone before she'd even had coffee. When she called to dispute it, the bank refunded 1 of the 4 fees as a one-time courtesy, which tells you everything about how routine this situation actually is for them. They have a script for handling the complaint because they get this complaint constantly. Okay, so, back at the counter. My situation. I'm not annoyed at the teller. She's reading off a script. This isn't personal. Banks train employees to offer this to basically everyone who walks in. I just ask one follow-up. No thanks, but quick question. What actually happens if a payment comes through and I don't have that turned on? She says, the transaction would just be declined at no cost to you. And I go, then I'd rather it get declined for free than covered for $35. Let's just leave it off. That's the whole move. Let's leave it off. I didn't negotiate. I didn't get weird about it. Hi, I just asked what the downside of saying no actually was, and it turned out there wasn't one. And here's the part that annoys me more the more I think about it. Under federal law, specifically something called Regulation E, banks are legally required to get your explicit yes before enrolling you in overdraft coverage on debit card and ATM transactions. Not implied. Not, well, you didn't say no. An actual, on-the-record opt-in. Which means, if you've been charged these fees and you never remember agreeing to anything, that's genuinely worth looking into, because it might not have been legal in the first place. Now, I'll be honest, when I say $15,000, I know some of you are thinking, that's a stretch for video title purposes. Fair. Let me actually show you where that number comes from, because I did this math out of pure spite one night. The average person who overdrafts does it about 8 times a year. 8. At $35 a pop, that's $280 annually, just gone. Now stretch that out across a working lifetime, 40 years, roughly. Fees haven't been going down over time, they've been creeping up. Run that out and you're comfortably past $15,000. And that's not even counting what that money could have earned just sitting in a basic savings account instead of funding a bank's fee revenue. Or the fact that some people overdraft way more than 8 times a year, which pushes that number even higher. So what do you actually do with this? Not a 10-step system, just 3 things, and you can genuinely do all of them today. Number 1, ask what happens if you say no. This works everywhere, not just at banks. Car dealerships, insurance offices, doesn't matter. Almost every time, the answer to what happens if I decline is nothing. Nothing happens. The thing just doesn't go through. That's the whole terrifying consequence they're hoping you don't ask about, because the second you ask it out loud, the pressure kind of evaporates. Number 2, check your own opt-in status. Today, not this weekend. Open your bank app, go to Settings, search Overdraft. A lot of banks now show you clearly whether you're enrolled and let you turn it off right there with one tap. If you genuinely never remember agreeing to this in the first place, you might be able to dispute past charges and actually get some of that money back. It's worth a phone call, even if the first answer you get is no, because sometimes a second call to a different representative gets a different result. Number 3, set a low balance alert instead. Every major US bank offers this for free. Same warning, same, hey, you're getting low heads up as overdraft coverage, minus the $35 tax every time life happens. You get a text or a push notification a day or 2 before you'd actually go negative, which gives you time to transfer money over or just hold off on a purchase, instead of finding out after the fact when it's already cost you. It's your money. You're allowed to ask a follow-up question at your own bank. If this is the first time you're hearing the words Regulation E, go check your bank settings today. Actually do it. Don't just say you will, because in 3 months, you won't remember this video existed. And if you want the next one of these, I'm covering how credit card companies quietly claw back that $200 welcome bonus you thought you already banked. Same kind of trick, completely different room. Subscribe if you don't want to miss it. See you in the next one.